Well, I don't know how many rate cuts the Fed is going to be able to deliver, but I do think we'll have quantitative easing. But again, that's not a good thing. That's just more inflation, and it's just meant to prevent a collapse. But we end up taking our medicine in a different form, and I think it's actually worse. So it's not going to be a good thing. The Lisa Cook situation, I think that if the Supreme Court upholds Trump's right to fire her, I think that's a negative for the dollar and for a loss of Fed credibility. Because if he could fire Lisa Cook, they're pretty much going to say he could fire anyone he wants. That, it's really up to his discretion to define what cause is. And, if it's just because he doesn't like her policies, that's still going to work. Because it's pretty clear that he's not firing her because of the mortgage situation. The only reason they know about the mortgage situation is because they were digging for dirt, right? They were trying to find something on her.
Gold and silver remain resilient, sustaining levels from months ago. Gold and silver stay above $4,000 and $51, respectively, demonstrating that the precious metals market is not just rallying. A more advanced structural base is being laid. After gold briefly exceeded $4,300 and silver above $54, falls have been mild, showing investor confidence rather than major corrections. This pattern implies a market actively discovering new support levels and developing momentum, meaning that both metals are moving up in the global financial system, according to analysts like Peter Schiff. Silver's technical breakout over a decade-old double top and gold's ability to hold high levels in volatile markets show the precious metals sector's resurgent vigor. Current market trends support Peter Schiff's claim that these metals will return to their historical worth as reliable storehouses. Gold and silver are becoming more important to investors as refuge assets that may protect wealth during uncertainty. These metals' steady capital inflow shows a growing global desire for tangible assets that preserve intrinsic value throughout market instability and uncertainty. Central banks worldwide reduce their U.S. currency holdings and raise their gold reserves in reaction to rising debt and dwindling confidence in treasuries. Morgan Stanley and other major financial companies have also begun recommending clients to invest heavily in gold, an uncommon but significant endorsement. Peter Schiff says this trend toward real, robust assets is a long-awaited sign of a global financial system change. With silver showing technical resilience and gold rising, the precious metals market is becoming a strategic hub for stability and value. Peter Schiff's interview excerpts follow. To receive updates quickly, subscribe to our channel and enable the notification chime. Many thanks, and enjoy the video.
Yeah, I expected them to end quantitative tightening some time ago, so they held out longer than I thought. And I agree that it's a precursor to going back to quantitative easing. It's only a question of time before the Fed capitulates and does that. And I think part of the pressure is going to come from rising long-term interest rates. Even if the Fed continues to cut short-term rates, I believe that long-term rates will rise. And that's going to be very problematic for the U.S. government, for the housing market, for the overall economy with so much debt out there. And I think it's a problem for the financial sector. And in order to alleviate that, I think we're going to get a return to quantitative easing. And that just means much more inflation, higher consumer prices, and ultimately higher long-term interest rates too, because higher inflation erodes away the value of bonds, and investors demand higher rates for holding on to them. Well, I don't know how many rate cuts the Fed is going to be able to deliver, but I do think we'll have quantitative easing. But again, that's not a good thing. That's just more inflation, and it's just meant to prevent a collapse. But we end up taking our medicine in a different form, and I think it's actually worse. So it's not going to be a good thing. The Lisa Cook situation, I think that if the Supreme Court upholds Trump's right to fire her, I think that's a negative for the dollar and for a loss of Fed credibility. Because if he could fire Lisa Cook, they're pretty much going to say he could fire anyone he wants. That, it's really up to his discretion to define what cause is. And, if it's just because he doesn't like her policies, that's still going to work. Because it's pretty clear that he's not firing her because of the mortgage situation. The only reason they know about the mortgage situation is because they were digging for dirt, right? They were trying to find something on her that they could use against her as a pretext for putting, a lackey in her place that's going to vote the way Trump wants. But I think that's going to be problematic if the Supreme Court says that you could fire her, because they're basically going to say that an independent Federal Reserve is not even constitutional, that the Federal Reserve must be accountable to an elected body, that they just, there's nothing in the Constitution that creates a fourth branch of government. So if they're not a branch of government, then they're part of one of the existing branches, is what they might argue. And so they may give more power to the president to, oversee these governors and dismiss them if he doesn't like the job they're doing. So I think that could be a problem. And, the tariffs, we'll see what happens with the tariffs. I think that the tariffs will be struck down, and, they're obviously unconstitutional, whether they get struck down or not. But if the Supreme Court does a good job, then the tariffs are going to get struck down. And so the question is, how is the market going to react to that? I mean, it's obviously a positive in the sense that the tariffs are not good, but the tariffs were at least bringing in revenue, not from the rest of the world, from American consumers who end up, footing the bill. But that means we're going to have bigger deficits if we don't get that revenue. And, Donald Trump has gone out there and said, if these tariffs the Supreme Court overrules my tariffs, it's a disaster. We're going to collapse. I mean, turn out the lights. The country's over. So, I mean, to the extent that people believe any of that, right, then, there could be some problems. I think the markets would be more relieved by the absence of tariffs, because I don't think people believe what Trump is saying about how vital these tariffs are to our national survival. But they will cost the government revenue. So if they're not going to get revenue from tariffs, where are they going to get it? Right? We have massive deficits as it is, and they'll be even bigger absent the tariffs.
The United States government encounters increasing fiscal pressures as international central banks decrease their dollar reserves, resulting in the Federal Reserve assuming the residual demand for Treasury securities. Analysts cautioned that ongoing monetary expansion and quantitative easing to finance government expenditures could lead to increased inflation and a depreciation of the currency, while escalating deficits, growing national debt, and unfunded liabilities amplify long-term risks. Social Security and other trust funds are progressively dependent on Treasury IUS rather than direct tax revenue, underscoring the systemic strain. Observers observe that official inflation and growth statistics may underestimate the actual economic pressures, concealing increasing living costs and potentially contributing to additional instability. Amid these financial challenges, precious metals are attracting renewed interest from investors pursuing stability. Peter Schiff underscores the attractiveness of silver, highlighting its historical undervaluation in comparison to gold and its significant potential for increased demand beyond central bank acquisitions. Gold and silver continue to serve as dependable repositories of value, providing a safeguard against inflation and currency depreciation. Schiff emphasizes that these tangible assets offer both security and enduring purchasing power in a context where U.S. fiscal policies, debt accumulation, and inflation risks persist in undermining the dollar's strength.
Well, I mean, Trump just threw that out on a social media post at some point. So there are no real tariff dividends. It would be the equivalent of just more stimmy checks that they would be sending out. But Congress would have to appropriate that money. So Trump just can't direct the tariff revenue to households. Congress would have to approve that. Now, they may get that through because no one's going to want to stand in the way between a voter and a $2,000 check. And especially, the way Trump proposed it, it's per person, not per family. So a family of four would get $8,000. Now, of course, most of that money isn't even going to come from the tariffs because the tariffs aren't bringing in that much money. So, they would just come out of the general revenue, which means you have to add to the deficits because we don't have the money. But even if, some of the money is offset by the tariffs, it still adds to the deficit because otherwise the tariffs would have subtracted from the deficit. And if we don't get the subtraction because we've just mailed out these tariff dividend checks. But of course, the biggest fraud of the tariff dividend checks is that we're giving the tariffs back to the people who are paying them in the first place. So they're not really getting a windfall. They're just getting their money back. Now, some people might get a windfall because they may not have bought that much stuff. And so, they may win at the expense of somebody else who loses on the deal. But they also defeat the very purpose of the tariff. If the tariff is really there to discourage imports by raising the price of imports, and so we don't buy as many imported products, if the government just hands everybody a check, now they have more money to pay those higher prices. So we end up subsidizing consumers to buy the items that we tariffed. And so now they don't reduce their imports. They just keep on buying. So we don't accomplish any, insourcing of our manufacturing. That only would theoretically happen if consumers balked at paying the tariffs. But if we give them a bunch of money, then they can afford to pay the tariffs. So it really makes no sense. But it shows that Trump doesn't even understand the policies that he's promoting.
Yeah, because I'm wondering about the effort to reshore manufacturing, and obviously we had trade issues with China and the refining of rare earths and such. And that's going to take a lot of capital. And so it seems counterproductive to give out the tariff revenue to the citizens, if you're wanting to reshore this manufacturing back on U.S. soil.
Yeah, I mean, you lose that, and then you lose the revenue. Trump was talking about how the tariff revenue was going to offset the big, beautiful bill. But, according to the Trump administration, when they were at the Supreme Court arguing that the tariffs weren't taxes, which is nonsense. Of course they're taxes. But they were trying to say the purpose is not to raise revenue. But, Trump boasted, not only after he won, but during his campaign, how we were going to replace the income tax with tariffs, and we were going to, have the External Revenue Service, and we're going to raise all this money. So to then go to the Supreme Court and say that it's got nothing to do with raising money, I mean, the Supreme Court probably saw right through that because it's clear that the tariffs are there to raise money. I mean, they were sold as a funding mechanism for the government. So gold is still above $4,000 an ounce. In fact, I'm pretty sure it's pretty close. I'll check it to being back above 4,100. It's 44,080. So it's holding above what would have been a record high, like a month or two ago. And silver is above $51. So I mean, silver is above the double top that was massive resistance going back to 1980. Yeah, I mean, silver is off its peak because silver got above 54 and gold got, above 4,300. But the pullback hasn't taken us back very much. So I think the precious metals markets are in very good shape, fundamentally, technically. I think they're around their new support levels right here. Maybe, better support's a bit lower, but they're close enough. So I think they've held up really well. In contrast to, fool's gold, aka Bitcoin, has not held up well at all. In fact, earlier this morning, Bitcoin got below 91,000. Now, that's still a high price, but it's quite a bit below the 126,000 that it hit a few weeks back. So definitely in a bear market there. And in fact, in terms of gold, Bitcoin is off by 40% from its peak. That is a pretty serious bear market when you're down 40%. You wouldn't know that by listening to all the hype in the mainstream media that Bitcoin is so deep in a bear market, but it is. Because I think the best way to measure the price of gold, the price of Bitcoin, is in terms of gold. because it's being marketed throughout the world as digital gold, as an alternative to gold. So I think gold is the proper benchmark for Bitcoin, not the dollar, especially since a lot of people that own Bitcoin don't even live in the United States. So they don't really follow the dollar as much as they follow their own currency. But I think gold is a international commodity, and everybody kind of knows its price in their currency. So I think you should you should try to measure stocks that way. And if you do that, the performance has been pretty bad in the U.S. We've lost about 70% of the value of the U.S. stock market in the past 25 years.
Are believing in gold being the safe haven asset.
Well, certainly central banks, they've been big buyers of gold as they've been divesting of dollars, which makes a lot of sense that, given the trajectory of our debt, it's clearly unpayable. And either we default or we inflate. Either alternative is not good. And so central banks don't want to hold U.S. dollars. So what are they going to own instead? Are they going to stockpile euros or Japanese yen or Chinese RMB? None of those currencies look particularly promising either. They've all got their problems. But gold is, the only clean shirt that's not in the hamper with all the others. Gold is the best monetary asset for central banks to own because not only can it be created out of thin air by any central bank, but you don't have any counterparty risk if you keep the gold in your own country. You don't have to worry about a default or inflation. You've got the gold, and you can't be sanctioned. Nothing. So that's a far superior situation than holding dollars and investing them in U.S. Treasuries to get a low yield, but also leave yourself vulnerable to the whims of the United States to yank your treasuries out from under you whenever we decide that it's something that we want to do. So yeah, this is a problem for the U.S. government, and it's going to become a bigger problem as the bond market really starts to sell off and yields really start to back up, and the Fed is ultimately going to up the size of the quantitative easing if it has.
Gold and silver demonstrate significant potential for sustained appreciation. As economic pressures in the United States escalate, driven by increasing deficits, decreasing foreign acquisitions of treasuries, and ongoing inflation concerns, which are directing investors toward tangible assets. Gold is anticipated to continue serving as a primary repository of value, underpinned by consistent demand from both central banks and private investors seeking safeguarding against currency devaluation. In contrast, silver, which has historically been undervalued in comparison to gold, is poised to gain from enhanced acknowledgement of its scarcity and industrial uses. As inflationary pressures intensify, capital is expected to increasingly flow into precious metals, generating sustained upward momentum, with silver potentially experiencing significant gains. As the market reacts to combined monetary and industrial demand in the coming years, these dynamics indicate that both metals may not only maintain their current levels, but also attain new highs, thereby strengthening their role as vital safeguards against economic instability and currency fluctuations. The question at hand is whether this trend will persist. Might gold and silver exceed their previous historical peaks in the upcoming significant financial cycle? Please share your thoughts in the comments. If this video provided any new insights, please remember to like, share, and subscribe for further updates on this ongoing monetary revolution. Thank you for your attention.